Hello everyone. This is the pre-market report video for today 6th July 2023 in the Indian stock market in terms of Nifty and Bank Nifty. Yesterday, Nifty opened a gap up of near 20 points, but within the day for multiple times it gone down and gone up like crazy volatile and in the end closed near flat. However, the good thing here is that the volatility was within the band of plus 30 and minus 50 points. And one more thing, yesterday Nifty closed above 19,400, precisely 19,415. But the post-market Nifty correction pushed it down below 19,400. Here, all this happened despite the fact both HDFC and HDFC Bank was under huge pressure as it dropped 3% due to the removal news of HDFC from all the Nifty indices. Both HDFC and HDFC Bank alone contributed over 85 points negative on the Nifty. So, if not HDFC Twins negativity, Nifty might have touched 19,500. Sector-wise, auto, FMCG, PSU Bank and oil and gas up by 1% each, while there was some selling seen in Bank Nifty. Again, that too, yesterday Bank Nifty was down by around 150 points. In that, HDFC Bank alone contributed 425 points on the negative side. It's not all negative. Unlike day before yesterday the advanced return ratio was 1.3:1, which means 30% more number of stocks were advanced than that declined. About institution, again and again FIs were net buyers. The net bought for 1,600 crore rupees and now usual DI booked some profit and the net sold for 440 crore rupees. Then after the Indian market hours, before the US market opening, US Census Bureau released the report that measures the change in the total value of US manufacturing's new factory orders. The data came as it just increased by 0.3% against expectation of 0.8%. So the new factory for the May month is way less than that of the expectation. In addition, early morning yesterday, S&P 500 released the Chinese service payment data for the June month. And the data came as 53.9 against expectation of 56.2 and also it was less than May month's 57.1. Here, Chinese data is important for US because of their service sectors are US company only. So basically, both these macros made all three major index in US market to open significantly negative. Then around 2 p.m. Eastern time, Fed released the FOMC meeting minutes. Fortunately, there is no surprise there. Fed and FOMC members did voted to pause the interest rate in the last meeting, mainly to study the impact of the interest rate in the US market, which is very much in line with what all the analysts expected. So after the release, S&P 500 and Nasdaq did trimmed some of the losses. In fact, Nasdaq index for some time did traded positive. However, as we discussed in yesterday's pre-market video, China did put the ban for exporting the two rare earth metals to US that mainly record for the production of semiconductors. This puts huge pressure on all semiconductor stocks. In the end, Dow Jones lost 0.38%, S&P 500 down by 0.2% and Nasdaq decreased by 0.18%. Even US VIX increased by over 3.5% and moved above 14. Then regarding US tech stocks, most of them increased. Facebook was the one that rallied most since tonight they are going to launch another social media called Thread, which is in competition for Twitter. About crude oil, earlier it dropped due to Morgan Stanley's oil price forecast cut, but there were serious conflict in Oman's Gulf which prevented some oil tank movements. That made the oil price to increase 1 to 3%. In terms of numbers, at the time of this video, WTI crude oil is trading near $72 per barrel and Brent crude oil is trading near $77 per barrel. Coming to Indian areas in US market, HDFC Bank was really very negative. In Indian market, it was down by just 3%. In US, it was down by over 5%. Despite that, ICICI Bank closed flat. Whereas IT stocks, it's mixed. Wipro lost by 0.5%, but Infosys increased by 0.7%. So, everything more of a stock-specific impact. There is no sector combined effect. Moving on, regarding GIFT Nifty at 3 a.m. Indian Standard Time, it closed at 19,520 mark. Thus, based on equating the yesterday's close, I see it's indicating only 20 to 30 points gap up opening in Nifty. Moving on, regarding Indian stock and sector specific. Day before yesterday, NSE released the statement that who are all they are going to replace HDFC in their respective index. Now, yesterday evening, BSE released the report that who are all they are going to replace. For example, in the main Sensex index, JSW Steel will be the one. In case of BSE 100, it's Zomato, Apollo Hospital in Sensex 50, and last but not least, Infosys in BSE Greenex. Again, all those can make fund outflow from HDFC and into the respective stocks. Along with this negativity, HDFC Bank filed the loan growth details with SEBI. Here, I'm not sure about the timing, but worth to know. HDFC Bank alone, the loan book grown at 15.8%, which is in line or slightly above the country's average. But with a merger, the loan growth was just 13% in the previous quarter, which means that was below national average. I think combining those two info made the HDFC Bank really very negative in US ADR. Anyway, let's see how Indian market reacting to it. Then the second info I like to highlight is about DCB Bank. Yesterday, Tata Asset Management approached the RBI for approval so they can increase the shareholding in DCB Bank to 7.5%. In the late evening, RBI granted the permission, which is really good news for DCB Bank. In case of FMCG, various companies released the sales volume statements. Here, whoever released the report, they released the good numbers. For example, Adani Wilmar sales volume increased by 25%. Then about Marico and Godrej, in their quarterly updates, they mentioned that their overall consumer demand was very steady in the April-June period. Basically, it's positive. However, in the CRISIL rating report, they mentioned that Indian FMCG companies' revenue is expected to grow 7 to 9% this fiscal, led by higher volumes and a gradual recovery in rural demand, which alone the statement looks okay and good. Here, my worry is this growth rate would be a little slower than the 8 to 9% seen in the last two fiscals. So, will it be negative today for FMCG? I have no idea. Let's see how market reacts to both the news. As a summary, last night, global momentum was slightly deteriorated as US market closed negative. But the major worrying thing here is the drop of 5% HDFC Bank in the ADR. Will Indian market defy the global momentum? Let's see. About the things to look out, during the market hours, various European countries such as UK, Germany and France construction payment data is due. Then around 2:30 p.m., Europe's retail sales data is scheduled to release. And finally, in the aftermarket hours, usual weekly US initial jobless claims, ADP non-farm employment and US mortgage related data are the ones we need to keep an eye out today. Coming to technical, in Nifty, it's like exactly same like day before yesterday. After the gap up opening near 19,400, sellers came aggressively and pushed it down to 19,330. And buyers re-entered into the market and pushed the price back again to near 19,400. Thus, on the daily chart for the second consecutive day, Nifty forms a short red candle with a long lower shadow and short upper shadow. The only difference is the candle is relatively small compared to day before yesterday. So again, it's a hanging man formation, which is a bearish reversal indication. However, on the positive side, Nifty continued the higher high, higher low formation for the 6th straight session. This formation can also be called as inside bar candlestick pattern, which also indicating a consolidation. In addition, hourly Bollinger Bands are also contracting, indicating the range-bound price action. So, Nifty expects to consolidate in the range of 19,500 to 19,300 and a dip towards 19,300 should be used as a buying opportunity. Then, in case of Bank Nifty, it formed yet another doji candle pattern on the daily chart, which in turn indicating the continued tug of war between buyers and sellers for the further market direction. Yesterday, Bank Nifty managed to hold on to 45,000 mark throughout the session despite volatility and correction. So now it has to continue to hold above 45,000 mark to make an up move towards 45,500, followed by its recent life high of 45,650 levels. From options engine open interest, 19,500 got the new maximum nearby call options added with small new put option open interest. Thus, 19,500 is the immediate resistance and the significant hurdle to break. Regarding overall options open interest data, 19,400 got the significant short straddle and the next maximum nearby put option open interest is at 19,300. Thus, 19,300 is the immediate support to look out for. Then coming to Bank Nifty, based on overall options open interest data, the maximum nearby call option open interest with less short straddle is at 45,500. So 45,500 is the resistance to break. And the maximum put option open interest with a less call option open interest is at 45,000. Thus 45,000 is the support to look out for. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.